We have Diederik Bruggink on stage from Netherlands, working for the oldest, one of the oldest banking institution in Europe, with the probably longest name, the World Savings and Retail Banking Institute / European Savings and Retail Group. Thank you very much for coming. You're not only a cash expert, but also digital currency expert. The floor is yours. Thank you.
Thank you very much, Robbie. And in fact, I'm speaking here notably on behalf of the ESBG, the European Savings and Retail Banking Group, which is part of the WSBI, the World Savings and Retail Banking Institute. And the latter indeed celebrate in was founded in 1924. So in 2024, we celebrated our 100-year anniversary in Rome, where the whole club was established. Speaking of, I will entertain you a lot, hopefully, this part of the afternoon. But what I firm say is are my own words. Don't attribute necessarily to either one of the associations or its members or any other body or sector group I'm affiliated with, just to set that record straight. Robbie mentioned indeed the European Savings and Retail Banking Group, which brings basically together 32 banks from across Europe, or members which together have all close to 860 different banks. It comes notably, for example, in Germany, we have the member is DEC26, but below that there are a couple of hundreds Sparkassen. Notably worth mentioning also is that we serve 162 million European consumers, which is almost over 1/3 of the European population. Of course, what makes it a bit different from the rest of the banking sector is that our banks typically serve consumers, and they are being united by what we call the 3 R's. Usually these are regionally rooted. They focus on the retail segment, and they also the responsible bankers. That can you, for example, see, for example, we do a lot of giving back to the society, but we also play a key role in the financing of the local economy, financing SMEs, and indeed providing loans to consumers to facilitate their dreams in building. Enough about the background of the associations. Let me entertain a bit on the key part of the debate, or let's put it more the key driver of the debate, which is the so-called dependency. I mentioned that the key topic of my presentation will be about autonomy. But why do we need this autonomy? It's about the fact that we are increasingly becoming dependent from actors not domiciled in Europe. Just mentioning an example here, the Germans over here will testify. You have this fantastic product called Girocard that you can use in Germany to pay for your goods at merchants. In France, they have a similar system called carte bancaire. They have similar use cases, but technically speaking, a Girocard does not work at the carte bancaire terminal in France. That problem has been solved by having a second brand on both those cards, either that of Visa or MasterCard. And that particular international brand facilitates the connectivity between the two schemes. So every time a German cardholder goes to France, the transaction be processed by Visa and MasterCard, which I deliberately, in this particular picture, put outside of Europe, because that's the key of the problem. These schemes are not domiciled in Europe, and as a result of that, the governance being elsewhere, they can make us do things that we maybe don't like to do. I will not go into detail, but it's quite a concern for the policy makers, especially given the current geopolitical situations. And then this, of course, only for those countries that do have domestic schemes, but also a lot of countries that, as a result of the push for SEPA in the past, for example, in the past, the Netherlands used to have a PIN scheme, Luxembourg used to have their own domestic scheme. All those domestic schemes have been disappeared in favor also for these American schemes. So as a result of that, almost 2/3 of all card transactions in Europe are processed on the card scheme rules that are not processed here. Is that then a concern for us? That's a very good question. But just to picture a bit what is at stake here, I put this graph here that you see at the right-hand side of the slide, which is basically presenting the size of the middle represent the number of transactions in a particular segment. And you have to note that on the horizontal axis, which is, by the way, on the logarithmic scale, That is the total number of transactions. Whilst on the vertical axis, you see the average transaction values. So how much do people spend? And what you can see here is that notably, you see where you see the most number of transactions with the low transaction values is typically the daily spending of the consumers. The biggest wall at the right-hand side is grocery stores, supermarkets. You see eating places there, fast food restaurants. Well, on the left-hand top side, it's more the luxury, travel and entertainment, low transaction values and high low transaction volumes and high values. Imagine that as of tomorrow, people cannot do the daily spending anymore using those cards. It puts us at risk. So as a result of that, in the 2020s, the European Commission and the European Central Bank both came up with the respective retail payment strategies that was basically emphasizing that there's a real need for having European-rooted solutions out there. And as part of the retail payment strategies, these European-rooted solutions should not have only pan-European reach and pan-European customer experience. They should be convenient, cost-efficient, safe and secure, and notably have a European identity and European governance. So as a result of that, in response to this call for this retail payment strategy, various countries started to deliver the on that premise. You see here that also next to these card schemes, account-based solutions started to appear, which you see some of those events here on this particular map. Again, Germany, GiroPay, Belgium had Payconic, France had Paylib, Bizum in Spain. A lot of events you are probably familiar with. And what we saw happening is that some of these started to come together in a core regional product called Wero. Also, the German banks are behind that particular product, and these countries are marked in light yellow. But we also saw that some of the other domestic solutions, notably at the Mediterranean region, started to come together in an alliance called the EU Payment Alliance, also to study how they could interconnect between each other and make sure that transactions vis-à-vis each other could be facilitated. And what we noticed that during the last summer, these two initiatives came together to develop a roadmap on how interoperability could be ensured. And in February of this year, they signed an MOU also indicating, okay, we will set a concrete hub up that we will facilitate, build to facilitate those cross-border transactions between all these others. So that's very good news in terms of delivering to the promise. It should also be noted that there are a lot of countries on here where you don't see any logo. That doesn't mean nothing is happening there. I want to have said and set straight. But these are not in scope for at least this getting pan-European coverage. It doesn't also mean that in those countries problems do exist or do not exist. Take, for example, the Baltic states. You don't see any logo on here. But it doesn't mean that the international card schemes are dominant over there. For example, in the Baltic states, they have a very good functioning system for P2P transactions. That's fully domestic on the national rails using proxies provided by the national central banks in the region. And for e-commerce transactions, it's more PSD2-based API transactions that are being used than the card schemes. So their problems only related to the domestic point of sale physical solutions. Having said that, we see all these type of initiatives, and those particular pictures, you see there's particular two banks, left and right of a center in the middle. And there we see just an example of infrastructures that can be used for those banks to connect together. Target and TIPS, the settlement systems of the European Central Bank, are all known to you. At the bottom, you have the digital euro. That could be a possible solution to solve this interoperability issue. But you see also here is mentioned the SEPA schemes that have been developed by the European Payments Council. For those not into the detail there, these are typically the rules and regulations that have been developed by the banking sector that basically facilitate you to make your daily SEPA credit transfers or SEPA direct debit or instant payment transfers using the SEPA rails. So if you look just in the interbank space, where basically the transaction needs to take place, multiple routes can be followed. That goes also from the point of interaction where clients are. If you mention just a moment for yourself, how many methods are there to get money out of your account? You can initiate a credit transfer, you can initiate instant credit transfer. Maybe your debit card is connected to the account. Maybe a credit card is connected. Maybe you have an account-to-account app connected to your account. So a lot of possibilities exist, and the question is, what is the best solution here to connect all these? I don't have the answer here. I raised a couple of questions over here, but I think it's very important to have the proper debate on what's best positioned, and not one of these is maybe to be favored over the other. Moving a bit more to the customer front end, what we hear a lot is that all these payment solutions will likely be tied or integrated or being connected to digital wallets. Most banks, as you may have noticed, are already offering wallets to their clients, which is quite a common good practice. But we also see big techs offering the wallets to the clients. Think about Apple Pay, PayPal, Google Pay, Amazon Pay, and what have you, all different features and functionalities in there. Also, some of the payment solutions that I showed on the slide before are wallet-based. For example, Wero, the product of the European Payments Initiatives, is wallet-based. And we also understand from the proposed digital euro regulation and design work is that the digital euro also will be wallet-based. So there is another player in town. And mind you, what we also have upon us, about 2 years ago, the EIDAS regulation was adopted, meaning that also the European Digital Identity Wallet will be upon us at some point in time, which, by the way, also will have interlinkings on the one hand with the digital euro, because the digital euro regulation points at interoperability with the digital identity wallet. And on the other hand, the digital identity wallet should also be used as a vehicle for strong customer authentication, which is the methodology that you use when authenticated for payment as an extra step. So, where in the past you would always have the debate, okay, what payment method is the first in wallet, which card is on top, that's being pulled out first by the customer. We could very well evolve into a debate where the question is, what will be the first wallet in here? So that's something maybe to keep in mind going forward. And if we have that debate, then we could also face the risk that the wallets are becoming a very important strategic control point going forward. There will be a lot of functionality or features, or whatever you want to call it, will be integrated in the particular wallet. And it will be quite key who will be the winner in the end. Think about, on the one hand, payments methods that be stored in the wallet. It could be cards, instant pays, or the digital euro. The identity itself should or could be stored in there. Think notably for identification purposes, but also, for example, which is becoming more and more important, age verification purposes. Just prove, okay, are you old enough to buy either this stuff or look at those type of pictures on the website. On top of that, you can think about value-added services like loyalty, invoices, and subscriptions that can be managed or stored from out of the wallet. So we will kind of have, in the best scenario, in some kind of scenario, we'll have some kind of super apps that will be developed for this particular wallet. So a key question is, of course, then how will the digital euro, or should the digital euro be integrated in there? And if so, of course, it should, with the other payment methods in there, also coexist with the commercial bank money-based solutions and other private payment solution-based solutions. And they should be seamless. The switching between them should be seamless from a customer point of view. Because also I think at the end of the day, the customer isn't really concerned about in what type of money he's paying at some use case. He just wants to pay. And at the end of the day, in 99% of the cases connected to this wallet, that particular amount of money will be moving out of his current account. And whether it's from the left or the right, he couldn't probably care less. So critical factors here for the wallet going forward, the wallet of the future is indeed that should be a user experience that's very straightforward. So instant, one click, easy to authenticate, and what have you. All payment use cases should be addressed. Ubiquitous, of course, acceptance everywhere, all over the place. No white spots or gap. I think in the end of the day, the convenience here is key to have those wallets properly accepted. But with all this in one basket, I would almost say all those eggs, it's extremely important to also make sure that the sovereignty is being governed here, because if the non-European actors here are able to deliver better user experience or better apps than we do here in Europe, we also here face the possible risks that we saw before. So I would argue indeed that wallets could become next strategic control point if mentioned here, because whomever controls the wallet at the end of the day also will control the user relationship. Coming then to the end of my presentation, wrapping up here, I think we heard a lot of driving factors, possible threats and possible ways of direction of travel going forward. But at the end of the day, I think it's the consumer who decides what payment method to use in what circumstances. So we also need to certainly take the customer in mind. And from a customer point of view, it's extremely important to just keep it simple. Just stay close to features in payments that you're familiar with. As a way of an example, if you look at the cashless payment transactions in the in the euro area, all cashless transactions together, so credit transfers, cards, direct debits, e-money, that's growing about 7 to 8% year over year, if you look at the statistics from 24 over 25. But if you zoom in on there and look at the cards only, these are growing between 10 and 11% year over year. That shows a couple of things, but most important is that consumers are used to using their cards. They are addicted to it. And we all know that it's a quite easy habit. It has been spurred a bit by the contactless adoption during the pandemic, but there was some bashing against the cards. And it will be quite challenging to, on the one hand, let's try to equal these type of customer experience that cards are offering. On top of that, pushing customers from one payment method to another, it's quite difficult. Just as an example, I put it here what it took in France to get rid of checks, more or less, and have the cards adopting the space. Of course, you have to keep in mind that the axes on the left-hand side and the right-hand side are a bit different in scale, but just to show that it took over more than 20 years that the last check disappeared in France. And by the way, checks are still out there. So we will have, if the ambition is to replace one payment method by another, I think we're on the wrong path here. But what you also have to keep in mind, it will be quite crowded at the point of sale in terms of payment solutions that are being offered and that customers can choose from. And we have to be very careful that it is not going to be cannibalizing one over the other, because that is not in everyone's interest, because it will be then investments down the road. So I think at the end of the day, and that will be the last remark now, the focus should be at least on putting the right efforts on the right place, keeping the customer in mind in order to achieve those policy goals. So thank you very much for being here with us. If there are any questions, I'm happy to take them. But over to you, Robbie.
Yes, thank you very much, Diederik from ESPG. And here that was our last presentation for today at 26th of March, in the year 26. Yeah. Thank you for coming. You find the material online, and we have a full recap of all presentations by YouTube, and it will be present there. Thank you very much also for listening, our online participants. Thank you and good evening.